Hello and welcome to Money Talks. I'm Asha Tanna in Istanbul. Desperate times call for desperate measures, and Saudi Arabia appears to be doing everything it can to fill a gaping hole in its national budget. The reason? Oil prices remain stubbornly low, which spells possible disaster for an economy that is energy dependent. The kingdom's latest measures to plug the deficit include raising the fees on visas for foreigners and big fines for reckless driving. Azhar Sukri reports.
This may look like a road traffic accident in the making, but what they call drifting is a fairly common form of entertainment in Saudi Arabia. It could also be a new source of income for the government. As revenues from the sale of oil fall, the kingdom is trying novel ways to make money, including imposing fines of more than $5,000 for traffic violations like these. For a country that's almost entirely reliant on oil, the drop in prices has been painful. Back in 2008, Brent crude was trading at around $140 a barrel. Today, it's about a third of that. Saudi Arabia's budget deficit last year stood at a record $98 billion. To plug that gap, it's trying to cut costs and find new forms of revenue. One of the other new measures it's introduced is a six-fold increase in visa fees. Foreigners will now have to pay $800 for a 6-month visa. The government hasn't said how much these measures will raise, but they're unlikely to make much of a dent. Its biggest money spinner is expected to be the sale of a 5% stake in the state oil producer Saudi Aramco. The partial privatization could bring in around $2 trillion, which the government will use to develop non-oil sectors, including defense and financial services. The fall in oil prices has in part been engineered by Saudi Arabia itself. It's been trying to drive out US shale oil producers to maintain its own global market share. It remains the world's biggest exporter. Even though there is a glut on the world oil market, Saudi Arabia continues to pump at record levels. Other major oil producers in the OPEC cartel have been pushing for Saudi Arabia to freeze output. But so far, the government has refused.
Something which has been highlighted is an informal meeting that OPEC members will have in Algiers towards the end of September at the International Energy Forum. And there was some talk that this might actually set the stage for some kind of agreement about an output freeze within OPEC, though I think it's fairly clear on more sober reflection that that's pie in the sky.
Saudi Arabia is trying to change the course of its economy. For its government, doing so without causing a crash will be its biggest test in many generations.
Well, Azhar joins me live in the studio. For once, I can say it's not women drivers that are the bad drivers in Saudi because they're not on the roads. It's obvious that bad driving is being clamped down on, but what else is behind the hike in visa fees?
Yeah, it looks like what they're trying to do is actually make it more expensive for companies to hire foreign workers, the so-called Saudification. We've seen this in various different parts of the Gulf region as well. Unemployment, though, in Saudi Arabia is about 11.6%. That's the official rate. It could be actually higher than that. When you look at youth unemployment, it's much higher. It's like about 30%. And we've seen the pernicious effects of youth unemployment in other parts of the Arab world. The Arab Spring in Egypt, for example, was mainly caused because of this very reason. And one of the things Saudi Arabia is most keen on is to make sure that there is no social upheaval as they make this economic transition.
Now, the drop in oil prices is also affecting other Gulf nations. How are they coping?
Yeah, one of the ways that a lot of them have been doing this is actually by going to the bond market, going back to the bond market, but for the first time in many, many years. Starting with Saudi Arabia, it looks like they are preparing to go to the bond markets later this year. They've already secured a $10 billion loan from international banks. Qatar sold about $9 billion worth of bonds earlier this year. UAE and Bahrain also selling between $5 and $6 billion. So tapping the bond markets once again, deficits look set to grow much, much bigger over the coming years. Already they're looking at about $150 billion for the whole GCC region this year. If oil prices stay the same as they are, the IMF is saying that those deficits could go up to $1 trillion in a few years' time.
OK, Azhar, thank you.